Hello and welcome to the Daily Brief, where we cut through the noise to bring you the most important stories that move the markets. I'm your host Tarun. Today is Wednesday, August 14th, and I have three big stories for you. You can find us on Spotify, Apple Podcasts, or wherever you consume your podcasts. And if you like reading instead of watching or listening, you can subscribe to our no spam newsletter for a quick rundown. You can find all the links in the description. Before I begin, I want to thank you for listening to us and sharing it with your friends. The Daily Brief is now the second most heard podcast on Apple Podcasts and Spotify with over 1 lakh listens. We go through every comment and feedback that you share with us, and this helps us a lot in improving the podcast. So please keep the love pouring in, and thanks again for tuning in. Also, please share this with your friends if you haven't already. So let's start with the stories. I first talk about the latest inflation numbers. I then move on to talk about the consumer confidence survey, and I finally talk about something that we have spoken quite a bit about: gold. So let's start by talking about the latest inflation numbers. In the aftermath of the pandemic's reopening, inflation spiked and has remained above the RBI's target of 4%. In response to the inflationary shock, the RBI increased interest rates from 4% to 6.5%. Since then, it has kept the interest rates unchanged because inflation has remained stubbornly high despite the high interest rates. But the inflation data for July came in and CPI inflation fell to a 5-year low of 3.5%. In July 2023, it was at 7.44%. That's a very big drop. And you might be thinking that this is really good news and hoping that the RBI will start cutting interest rates. But don't get excited just yet. There's nuance to this. The drop in inflation is because of base effect. I know that sounds like a made-up thing, but let me explain. Inflation is typically measured as the year-over-year percentage change. That means if inflation or any other economic metric was unusually high or low in the previous year, it creates a base that can make the current year's changes look more extreme than they actually are. If prices were very high last year, which is the base year, even a small drop this year might seem like a significant decrease when we calculate it as a percentage. This is because we are comparing this year's numbers to last year's unusually high numbers, making the fall look bigger than it actually is. For example, in this case, the headline inflation rate back in July 2023 was 7.44%, which is a very high number compared to the long-term averages. And now, because prices are starting to rise at a lower rate, inflation has fallen to 3.5%. This fall is almost entirely because the point of comparison is an outlier. So this fall in inflation won't last. Once the base effect normalizes, inflation will return to its trend. Having said that, let me briefly talk about the July inflation numbers. Headline inflation or CPI inflation fell to 3.5% from 5%. But as I explained, this was because of the base effect. If you look at food prices, they are still rising but at a slower pace. Core inflation, which removes food and energy, rose from 3.1% to 3.4% because of the increase in telecom tariffs, which we have spoken about in the previous episodes. Last year and even the last few months, food inflation was high due to supply chain disruptions and adverse weather conditions, creating a base effect that makes this year's inflation rate appear lower, as I mentioned earlier. Now, the hope is that this year's expectation of a good monsoon will become reality and food inflation will fall. So far, monsoons are progressing well, but let's hope they continue that way. In some good news, energy inflation has fallen 11 months in a row. In July, it dropped by 5.5%, which is a bigger drop compared to June's 3.6%. The main reason for this big drop is continued decrease in LPG prices. The stabilization of global crude oil prices has also significantly reduced fuel inflation. Despite geopolitical tensions, oil prices have remained relatively stable due to increased global supply and subdued demand, especially from China. Let's now talk about the consumer confidence survey. One way to think about the economy is that it's a sum of how people earn and spend. You see all this in one number called the GDP. Now, in a broad sense, GDP tells you how the economy is doing, but not necessarily how people are feeling about the economy and themselves. To know this, you need to ask people how they are feeling, and this is what the RBI does on a bi-monthly basis. It conducts surveys to know how people are feeling about the economy, their inflation expectations, etc. Let me start with the consumer confidence survey. In this survey, they ask people how they are feeling about the general economic situation, employment scenario, overall price situation, and their own income. This survey gives you a sense of how people are feeling about the current economic situation. Consumer confidence crashed in 2020 because of the pandemic, as you would expect. But since then, it has been rising steadily as life has returned to normalcy. But that rising trend has changed. Consumer confidence declined for the second consecutive survey. Except for spending, people's sentiment has turned negative about the current general economic situation, employment scenario, overall price situation, and their own income. The survey also asks people about their perceptions of the factors I mentioned 1 year ahead. Although the confidence about 1 year ahead was still positive, it moderated in line with the current situation. Now, what does this mean? Well, despite all the noise around India's high economic growth rate, people are starting to have a somewhat negative sentiment about economic growth. People are feeling less positive about their employment situation, prices, and income growth compared to the previous survey. This might be a reflection of the increasingly difficult job market, the rising layoffs, and the low or poor wage growth. As we've spoken about numerous times, India has a massive unemployment crisis, especially among young people. Now, it's important to note that people's sentiment is volatile, and it's important not to exaggerate the current sentiment. In yesterday's episode, I briefly spoke about inflation expectations. Here's what I said. The RBI is worried about this because when food prices rise, it affects everyone. Imagine going to buy your favorite snacks and realizing they cost more than last month. No fun, right? The RBI knows that high food prices can really squeeze our wallets, so they're monitoring this closely to make sure things don't get out of control. So until the RBI is sure that inflation will remain under 4%, interest rates will remain unchanged. In his recent policy meeting speech, the RBI Governor Shaktikanta Das explicitly mentioned this. He said that high food inflation affected household inflation expectations, meaning if inflation continues to remain high, people will continue to expect it to remain high. This could lead to an increase in wages and the cost of living, both of which will lead to companies increasing the prices of goods and services. All of this will lead to inflation increasing and remaining sticky. Now, there's reasonable evidence to show that the future inflation expectations of households affect their purchasing decisions, which in turn ripple out across the economy. Now, the reason why I'm saying this is that the RBI also conducts a bi-monthly survey asking people about their inflation expectations across 19 major cities. It asks people how they're feeling about the current inflation 3 months ahead, and 1 year ahead. On all these three metrics, the inflation expectations of people rose compared to May, when the last survey was conducted. That means people not only feel that the current inflation rate is high, they think that it will remain high 3 months down the line and 1 year down the line as well. In the survey, the RBI said that for 1 year ahead, inflation expectations closely matched food prices, housing, and the cost of services. This makes sense considering food and housing are two of the biggest household expenses. We make repeated purchases of food items in a month, and that means if the prices are high, it will stick in our minds. This shows up in how the CPI inflation is calculated. Food and housing accounts for 50% of the weight in the CPI basket. Now, we've spoken about food inflation multiple times on the show. Food inflation has stubbornly remained high because of heat waves, poor monsoons, and pest infestations. Food inflation fell last month on a year-on-year basis, but that was because of the base effect. In other words, inflation in July 2023 was high, and in July 2024, it rose at a slower rate, which is why inflation fell. But prices of vegetables and pulses still increased on a month-on-month basis, but at a lower rate. Finally, let's again talk about gold. I know we talk about gold a lot, but I have to talk about it again because gold hit a new lifetime high. You may be wondering why. The US released the Producer Price Index data, which measures the rate of inflation of the selling price of domestic producers, and it rose less than expected. That means this is another sign that US inflation is under control and that the US Federal Reserve can afford to start cutting rates in September. So why does this matter? Well, lower interest rates generally make gold more attractive because gold doesn't pay any interest itself. So when rates are low, holding gold becomes relatively more attractive compared to bonds. Based on all this, the Spider Gold Trust, which is the world's largest gold-backed ETF, hit a lifetime high. Now, if you're wondering why Indian gold ETFs are not at lifetime highs, you have to remember that the government in the recent budget reduced import duty, which led to a fall in gold prices. But domestic gold ETFs were up by 0.5% today. Apart from this, gold prices have remained high because the geopolitical situation in Middle East remains tense. Iran has vowed to respond by attacking Israel in response to the assassination of Hamas leader Ismail. The US is also moving more troops and weapons to the region in anticipation of Iran's response. So this is something to keep an eye on. If you want to know everything about gold, where it comes from, what affects its prices, and much more, my colleague Bhuvan did an episode with experts from the World Gold Council diving deep into all aspects of gold. Check out the link in the description. And that's it for today's episode. We'll see you in the next one.